Hi, this is Anthony Parent of IRSMedic. And you know, the tax code is a kind of a hard thing to deal with, no matter where in the world you live, and especially if you are a U.S. person who lives overseas. And you know, one of the top jobs our clients have or started with is teaching English as a second language. And so I have my good friend Ryan Socash with me, who lives in Poland, and he is now a real U.S. expatriate. The tax code got a little much for him, and now he is no longer a U.S. person. Ryan, thank you so much for joining me today.
My pleasure, Anthony.
Now, did you start? You left the U.S. You left Illinois for Poland. Did you start as an English teacher when you decided to leave the U.S.?
I think it's an interesting story for those of us who have not spent time abroad or worked abroad, because when you move to another country, you're not at the advantage that you've had since birth. I mean, the world is not your oyster. For one, you have a lot of bureaucracy that you have to get through in order to formally get your place. But for two, there are often language barriers. So even people with serious competencies in business or arts or whatever realm of professionalism you might enjoy, they tend to start off as English teachers. That is like the low-hanging fruit. Everyone can do it, because what Europeans, I've found, really value more than hard knowledge is just the opportunity to have direct access to the language and conversation with a foreigner. It's like, express cultural, linguistic lesson that gives you real life opportunity to use the things that you studied in books. So, yeah, when I came to Poland, and I don't talk about this very often because it seems kind of abstract. I've like publicly. People know that I'm a dyslexic. I gave a TED talk disclosing that I'm a dyslexic, so it's out there. But I did work as a native speaker of English or an English teacher. I've even worked in universities. This was going on 10 years ago. And I found the job to be very, very rewarding. But more than anything, it was like an interesting passage into European life, because the people who were my students, they, in a way, also became my mentor. I mean, these people prepared food for me. It was really very personal, the interaction. It wasn't just strictly business. And so I would be lying to you if I said that without teaching English, I'd be where I am today. It was really an important part of the path. And as you pointed out, the tax liabilities can really add up for Americans abroad. And when you're just a simple college student, or someone who's out there traveling the world, no one prepares you for tax law. It's maybe lightly touched upon, mentioned by your parents. They file your W-2 when you have your high school job for you, because high schoolers can't be bothered, and that's all that you know about it. So when you suddenly find yourself uprooted outside of your country, you're only focused on learning that country's laws, that country's deal. And it would never occur to you, actually, that as a U.S. citizen, you've got some very, very serious responsibilities and duties that are asserted on you, for the privilege of the citizenship. And that's why I thought it'd be really important if I could pick your brain a little bit today. Okay. On some of the things, English teacher, let's say that is just the classic example, but really anyone who's preparing to move abroad or maybe is living abroad and wants to start working, things that they can do to make sure that their status back home stays, as it's supposed to be. And so I've created a few scenarios for you. Okay. And maybe I can pick your brain. This is fun. I get to, most people have to pay like hundreds of dollars an hour to chat with a lawyer, and they get all pissed off when the lawyer is like, "How was your day?" I get to pick your brain.
Right, the answer is it depends. There it is. Yeah. So it depends too. That's a lot of money for it depends. Right on.
Exactly.
So what's your first question? What are you thinking about?
My first question. Let's keep it really simple.
Okay.
You're a backpacker. You're traveling, and you want to work as a native speaker, and you get hired on a freelancer contract. So you don't have your own business. You don't have full-time employment, but you're just a freelancer. I'm assuming also that you have a bank account that your company would pay you into in the new country that you are currently calling home. What are some things you'd have to do to prepare for that scenario as a U.S. citizen?
Okay, so the first thing to understand is if you're looking for what to do correctly, the last people you probably want to look to is your friends. Because this is the thing, and I just know it because I have so many friends and family members who've worked overseas all around the globe, and I know that the level of compliance is not perhaps as high as it should be. The thing most people don't understand is that, the level of noncompliance domestically, if you get caught not filing, it's really not a big deal. You just file some old stuff and you can kind of clean it up. It's not that big of a deal. With the international stuff, it could get a little tricky, and really some things that can get tricky. Now, a few things, if you're a backpacker, look, I don't know if we're really doing a lot of returns for backpackers.
Sure. Usually, well, the backpackers sometimes become, I don't know, travel entrepreneurs.
Right.
We're going to get to that scenario.
Yeah. So, the first thing to understand is, that what you do overseas is taxable by the IRS. That is your first surprise. We have something called universal tax jurisdiction. What it means is you make anywhere in this universe, it's taxable by the IRS, right? You could really be on the other side of the galaxy, and the IRS would say, yeah, you pay up. It's universal. It's not worldwide tax jurisdiction. It's universal. See, they're leaving it open for the future. That's what I'm saying. So that's they already staked their claim there. I think we should limit that right now. So that's your first surprise. Now, on top of that, is that, and now you'll also hear but you don't have to pay taxes to the U.S. if your income is below a certain threshold. And that's true. That is true. Your income has to pop over 105 USD for 2019 or 2020, something like that. It changes every year for you to owe a tax to the U.S. government. However, that doesn't mean you can't file. You still have to file to prove to the IRS that you owe money. And in fact, if you're one of those people who has an income exclusion and you have children, you may really want to file because that child credit was increased. Yeah. So you could actually get a refund from the IRS. And I think that's a big deal, right? A couple $1,000s, isn't so bad, right? You could actually get a refund even though you paid no taxes into the U.S. and even though you're living outside the country. So I would think that's something. And by the way, you're time limited to get a refund too. So you want to make sure that, hey, look, if you aren't filed any of the past few years or something, you could be leaving money on the table. I would say just look at that. And, a little bit of tax advice goes a long way, I think.
That was one of the amazing things when I came into compliance is that not only was I not penalized when I came clean, but I had received the refunds, and I really didn't expect that. It was, and I thought it was nice that okay, it's a hard game to play, but they do play it by the rules in a sense. I mean, if you do the refund, you get the refund, even if you don't live in the U.S. So I guess the consensus here is that if you're just kind of a freelancer, it's easy enough to file your W-2 right. If you have a foreign bank account.
Well, a freelancer wouldn't be a W-2, but you would put that on a Schedule C. And it's simple enough. Now, the add-on things you're going to have on there is, your foreign income exclusion. That's got to be an add-on. You have to do a form there. And then you got to make sure you add in some bank account information. Those are the things you really want to be doing. And now I would say this, too. And there's a lot of firms out there who are doing pretty good work. You just want to do a little bit of research into them. I would say this. For people who are living overseas for the first time, though, you really might want to not rely on a software. Mm-hmm. Maybe for the first years, is maybe get somewhere where there is somebody you can ask questions, just so as you get up and you can ask those hypotheticals. Okay, well, what happens if I get married and I do this? So that's kind of a good thing to do as you're getting set up, because once you do understand the rules, you can make it, and it's not the scariest thing in the world. It can get scary, especially that day you wake up to find out, wait a second, I had to be filing all these years?
Exactly. Well, you just kind of demonstrated why it's so important to seek the assistance of a professional, because I said, oh yeah, you just file your W-2 and you're good. And it's like, well, Ryan, not exactly. There are a few more steps to it. And I've noticed that those little things can very swiftly turn into big things. So you really have to kind of get it right the first time. All right, let me give you another hypothetical. Okay. Your native speaking job went well, but actually by trade, you're a computer programmer. And as you were teaching English, you started teaching English in a computer coding firm, and you said, I could basically do your job twice as fast. And the guy says, okay, welcome aboard. Full-time employment contract. retirement benefit plans. So they're stashing away a pension for you, health insurance, the full shebang. Is there any difference between that scenario and the freelance teacher?
Yes. So the big thing that I heard in there is the pension. And one of the things that people don't realize is, and this is so, I was only backpacking for, a couple months. I was just touring, fall in love, settle down, you find something, and now you find steady job and everything's going right. Well, that pension's really something you got to watch out for. And this is sort of, there is no easy answer to this pension, but because it depends on what the treaty is, and it depends what kind of pension it is, and it also depends on who is contributing to it. The thing that you need to watch out for is, in some cases, that pension could really have a lot of penalty problems in there. There is a litany of foreign reporting forms that are required, and if you don't file them, the IRS can assess $10,000 penalties pretty automatically, and they're starting to do that right now as we're seeing it. Form 3520 penalties, Form 3520A penalties are automatically assessed, and it's related to foreign pensions because what they're considered, what they can be considered, is trusts. And so the IRS, so it's a retirement plan, but the IRS say, well, no, what it is really a foreign trust. And that's like if someone was in the U.S. with millions of money, and that's sort of the compliance regime that they're throwing at this, is that somewhere along the line, the IRS got the idea, and this is sort of a general rule that you won't really go wrong with believing. Somewhere on the line, the entire Washington, D.C. has become convinced that every American person who's living overseas is doing it for one reason, to avoid taxation in the U.S., and is living the high life overseas.
Yeah.
And they're going to use these very elaborate loopholes to avoid taxation unless the IRS treats them like hardcore, as if you are a trustee of $1 billion endowment. I mean, that's really the level of compliance. It's nuts. And we see that too on the foreign corporations too. The IRS just treats like, well, it's foreign. And here's something to think about too. And this is the way the IRS sort of divvies things up. The IRS has two main units that deal with individuals for the most part. Self-employed small business, and then large business and international. Now, that's kind of always like, wait, you have small business, self-employed is one, right? Large business and international. It's like, but everybody international isn't large, right?
Well, that's a crazy thing. You
right?
end up at this kind of threshold of the big major corporations that have floor after floor of office space filled with lawyers to deal with this kind of stuff. And it's interesting how the small incremental steps, I was a freelancer, now I have a full-time job and a retirement pension. And your mom says, oh my God, son, I'm so proud. I thought you were crazy when you moved away to Belarus, but now I see that it was the right thing for you. Congratulations. And boom, 5 years later, Mom, do I have to file taxes still back in the U.S. because I got this weird FACTA document in the mail? What's up with this? And then you've got issues, right? And so it's like a really, really small differentiation, something that you would probably just disregard as being a liability, can change your game altogether. So, okay, that's important to note, I think. All right.
Now, by the way, and I mean, some foreign pensions require little or nothing. So, I mean, it's a huge depends. I mean, that
it seems like it's more the reporting obligation than...
Yes.
Yeah.
Right. There may be taxes due, and that's a tricky thing, especially for our friends in Australia. The superannuations are really... The IRS is difficult on those, and especially if a self-managed retirement plan. You can have a little bit more fun with that, but every situation can be dealt with.
All right, let's say that you're an entrepreneur. You were such a successful computer programmer that you decided, that's it. I'm opening my own LLC to limit any chance of people suing me directly in case this plan of mine messes up. And I mean, that must be better, right? Because you have a limited liability corporation. So naturally, you as an individual are safe.
Yeah. So here's a big problem with that.
I wasn't right.
Oh, you're not ready yet? Okay.
No. I was being sarcastic, Anthony.
Oh, okay. So here we go. Here's the problem. If you filed for articles of a limited liability company in some state in the U.S., you will not be treated default corporation tax status. Okay, you won't be. It's an LLC. There's really no default status. Probably the default would be a Schedule C. If you filed for articles of incorporation in the U.S., you would by default be treated as a corporation for tax purposes, a C corporation, okay? Now, let's suppose that you find some limited liability company equivalent overseas. The default rule is not that you're treated as an individual or taxed, but default rule is you are taxed as a foreign corporation, even though you're an LLC. And with that comes a whole litany of very even worse compliance, very difficult to get correct compliance. It's called Form 5471, and it's where you have to report your ownership interest when you own more than 10% or more of a foreign stock. But that 10% too is not exactly right, because sometimes you have to count other people's 10% that aren't yours. That's not yours. The IRS will actually make you report the stock ownership of somebody who's not you as you owning it. And that they call that attribution, which is sort of a funny word to make somebody do what they shouldn't have to do.
Yeah.
That's the way it works. Just make up we're going to attribute it to it. So you just tell people that we're going to attribute this to you. And that solved it. So the 5471 really sort of now it's like, and I think the same analogy applies. You're no longer, think of this. The IRS isn't thinking of you as self-employed, self-in-business. Mm-hmm. They're thinking you of large business and international. They're lumping you, person who owns this, into large business where things like Coca-Cola and large multinational corporations are. Ford Motor Company.
Can I slow you down?
They're treating you like that. Yeah, what's up?
Can I slow you down? What if you're the only person in your LLC? You're the 100% owner and you're the only employee effectively. That doesn't change anything?
If you could disregard the entity, you might be able to avoid some filing requirements, but no, you being the owner, that's it. And it's really a nonsense rule, because here's the thing that's to understand. Here's the IRS. These forms, and I've said this so many times, the U.S. tax code is so complicated, there's not enough people in the world to be able to administer it. There's not enough talented people. Well, maybe there's enough talented people, but we can't have them do anything else. So I guess goodbye to innovation. They'd all be working on the tax code.
Yeah.
Because it's so insanely complicated the number one thing, and this is what you'll encounter worldwide, you'll never encounter a tax system as convoluted and as stupid as the U.S. tax code. And here's the reason why. When the first income tax code was passed in 1913, it was sold as this great thing. It's like, you know what? This tax code's going to provide all these things. It's going to do all this. We're going to be able to generate our social policy through it. And Americans have this built-in system where, if there's some policy we think think people do, we won't tell them directly. We won't say, oh, you can't do that. But what we'll do is either we'll encourage them through some sort of tax credit, or we'll punish them through horrible taxation. And one of the things that gets punished is the idea that, well, you are leaving the U.S., aren't you? Are you telling me the U.S. isn't good enough for you? Well, if you're going to leave us, well, you're going to get the worst of our tax treatment. And it does definitely is that way a little bit. It can certainly feel that way a little bit, because there's some things in there.
Can you maybe clarify what the worst of our tax treatment would be in this particular case of having to file 5471? Okay.
This is something where I can't give straight answers. Where there's really where you run into situations where you actually can't advise someone to law, because it's like this. Okay. So thinks an answer is. Okay. We think the IRS thinks the answer is this based on all of their internal memos. However, we believe their answer is incredibly flawed. We believe that their answer won't satisfy a challenge in tax court, and that will result in and the IRS will lose. Well, now we're in a situation. Well, what do? Do we say, hey, IRS, we think you're wrong and we want to challenge you in tax court? Or do we say, and because now here's the thing, our client is signing up for a fight. Our client is signing up for a fight that may not go their way. Trust me on that. You could be right all the time. Very good lawyers who have the right case are ruled against all the time. That's the way it goes. Litigation means you might lose something you should have won. So you're going to be taking all this risk for one client for a point the IRS would probably lose on. So what do you do in that situation? Do you do it? Do you file according to the way you think you would prevail? or do you file the wrong way according to the IRS? And that really is where we get into discussions with our clients about, well, which approach do you want to do? Do you want to go with the way the IRS has it, which we think is wrong and wouldn't win in tax court, or do you want to go with the way that we think would ultimately prevail? And that's what we so. And I mean, and in things, and when you're talking, and the thing is like for a lot of our clients, this issue isn't going to be an issue that's going to result in $500,000, $1 million of tax savings.
Yeah.
You're talking about something. Okay, well, look, you've got to pay $500 more here or $2,000 more here. So as we're looking at it, it never makes sense to them to say, well, I want to litigate that issue, Anthony, and what if I lose it and I'm lose on it. And so that's the problem that we have. And this is the thing too. The IRS doesn't want clarity.
Yeah.
They don't want it because they love this vagueness, because in this vagueness, they know taxpayers, when we say, well, look, here's your options. You do it the IRS expensive way, which we think is right, or the right way, which may or may not be wrong. When the IRS is getting more of their way wrong they get more their way because people are so afraid of running afoul of them that they'll get more by being intentionally vague. And they are all over. And internationally, it's everywhere. It's everywhere. When we're looking at this, like, no, you're wrong, and your rules are wrong. This is an entirely, they'll even, if you get a Freedom of Information request, you could see the email exchanges with IRS technical agents and attorneys as they're discussing this.
Yeah.
And you're laughing because you're like, well, look, this kind of looks like, a first-year law student asking a question about something, and clearly the person who's answering doesn't have time for them. They're just blowing them off.
Sure. And
they're trying, and now they've come up with a completely no, that's not right. But no one was giving them guidance. So this IRS employee who's trying to get this answer, going around to people to hey, help me out with this. Yeah, go, now they just make it up. They're like, okay, well, no one's telling me the answer. I'm like, all right, well, I'm going to copy and paste and say, there it is. And so there is so much of our tax code where there's nothing concrete. You can't say, here's the concrete answer. It's all, hey, client, let's have a discussion about what you want to do with this risk that you have.
Yeah, it's crazy because it reminds me of my kids. They're into asking me these hypothetical scenarios, like, would you rather eat dog fur or drink toilet water? And what you just described is like the devil's version of those hypotheticals. It's like two really bad choices. None of them are really right.
Was the dog in the toilet? Because I'm going to go with the dog right now. Right.
I mean, I would rather do all three of those things than deal with the kind of scenarios you've just described. But it's very interesting, and I wonder, as an attorney, how often you have to actually bear the grunt of your clients' frustrations when you tell them, like, these are the two pretty much messed up options that you have. Shooting the messenger, I think, is a real thing. And it's like going to a doctor. You have some terminal illness and you just want a solution. Ultimately, you have choices to make. The doctor's not going to make the choices for you. And it's weird that this tax code seems in some ways as vague as a terminal illness. I mean, it's crazy. So I guess for the entrepreneur, maybe either make sure you're really good for it or back off of the LLC until it's really time for that to count, because running 5471 is going to be thousands of dollars. The penalty exposure, tens of thousands of dollars potentially.
Oh, yeah. In your audits. I mean, and I mean, you and I have talked about this a lot, and even, and I've had Keith Redman on of American Expatriates. We talk about, look, here's the thing. If you're worried about the IRS coming to arrest you, it's just not going to happen if you're overseas. The chance, if you did something in the U.S. and left, yeah, they're going to come and get you. But if you're just living overseas and not filing taxes, don't.
Yeah, but come on, then you have to.
Right, but it's
you have to live as a criminal.
Right, and then the thing is, it's like now you have to, every time you travel back to the U.S., you have that in the back of your head.
Of course.
Okay, what's going on here? So that's sort of the thing, and so it's easy to ignore year after year after year. But it's like at some point, are you really done? And I mean, well, you're done with the U.S., but you expatriated correctly, so you wrapped it up fine.
I also had personal reasons for doing so. Returning to my ancestral heritage has always been a thing for me. But yeah, I mean, it is a sense of relief that I was able to work with you guys and make sure that everything was put out correctly. And from the time that I learned about these tax laws, being kind of the hypothetical examples that I've given you here, it was the worst part of it was having this feeling that you are involuntarily wrong in the law. You know what I mean? Like you did nothing in bad faith. You're not a criminal, but in the eyes of that code, there's no other way to assess it than I'm wrong and I have to make this right. And coming forth, it is very, very, very scary because they could do with you as they please. Now, in my case, we're fortunate. As you've described, a lot of people are fortunate when they come forward. I mean, if it's done correctly. Is that correct?
Oh yeah, a lot of people, and the IRS, and I've said this before, the IRS streamlined program for people who are overseas, and like you, who didn't have things right. It's a great program. We ran you through it, and you ended up with a refund.
Yeah.
So that's still a good program out there, and it's just, and I would say a lot of people who, and because there's no penalties if you live overseas, you know, our feeling is like really investigate to see if you make sure you're 100% compliance, because this is the time. If there was a little something out like, oh, you know what, that foreign pension I didn't put on there, and I am going to start reporting it right. Now, when I start reporting it right, is the IRS going to know in the previous years I reported it wrong, and is that going to trigger an audit? And those are kind of legitimate questions because the IRS, that's actually one of the IRS ways the IRS selects for audit, is they can tell. It's like, wait a second, here's a form 5471 that comes out of the blue, and there's millions of dollars in it. Well, how did that happen?
Yeah,
and exactly. I don't see a form, so we know there had to be a previous year. Maybe there were other forms involved there too. So that's the thing, is some of your, the people at greatest, and this is the thing, the people at greatest risk for an audit are those people who filed returns. And that's true.
Yeah.
So, and if you filed a return and you live overseas, unless there's a handful of firms that I would say, yep, that return's going to be right. And by right, I mean right enough. We'll have a disagreement about how to handle something, or, they handle it this way or that. We know their points, we know their arguments, and we're still wondering, like, I don't know who's going to be right. We don't know. And I'm hoping they're having the same conversations with their clients, so their clients know what the risk is of a particular treatment.
So to wrap this up, I think with the hypotheticals, the only thing that we didn't touch upon is how do you report a sole proprietorship? Mm-hmm. But I think that's not 5471, is it?
No, that would just be a Schedule C. That's just a Schedule C, even if you're overseas. Yeah, that's not a big deal.
That's not that big of a deal. Mm-hmm. Some people may have been away years ago, I don't know, a decade ago, 2 decades ago. And let's say that they had their stint abroad. They never reported any of their activity in other countries. They didn't have any malicious intentions, of course. They were just doing their things. They moved back to the States. Life went on. And what are some of the issues that they might want to consider either, digging up, correcting, reporting? For example, if they just left their bank account in England open all these years, is that something that should be addressed?
Yeah, so a few triggers that happen on bank accounts, and it's a very common thing, is you have to report a bank account ownership when you have $10,000 or more overseas in any combination of bank accounts. And that's called an FBAR. Now, there's a statute of limitations to file on that, 5 years after the due date of the return. That's it, you're done. So, hold on, 6 years. No, 5 years. I got a lot of statute of limitations in my head. I believe it is a 5-year statute of limitations. Don't hold me to that. And so that goes away. But now the other thing, there's some things that don't have a statute of limitations. Form 5471, Form 3520. So pensions and these corporations. So that if you lived overseas if you're overseas in the year 2000 and say you had a shell company that was formed in Switzerland while you did consulting, and you never dissolved the company, and maybe at some point it had bank accounts or whatever, somebody would tell you, and a rational response to that would be, well, that was 20 years ago and you have nothing to worry about.
Yeah.
That's if we were living in a rational world. However, we're dealing with the IRS. So the answer is, watch out. Watch out. If you get letters or notices from the IRS asking you any questions, don't say a damn thing and get some help, because this is the common situation. And we ran into this case very recently. A guy who actually never lived overseas, however, his dad did and his brother did, had a corporation in Switzerland that closed sometime. We think the account closed in the year 2001, and the entity, we really don't have a lot of information on it. Well, the IRS got a hold of some information that listed our client as a shareholder on the of the company. Now, this is something his father did without his knowledge, so he didn't know anything about it. And now, guess what? The IRS is actually, and this is what happened, he got the notice, he just went to his tax preparer, like, what's this? His tax preparer is like, yeah, I don't know, we'll just deal with it. Tax preparer had no clue that you stepped into one of the biggest penalty hazards of all time, didn't realize what was going on. We swooped in before it was finalized. Like, wait a second. The IRS is trying to assess 17 Form 5471 penalties for $170,000 for something this guy has nothing about. And he's like, I seriously don't have this money. I don't know. My dad was a strange guy, loved him to death. He did a lot of weird stuff, but I don't know anything about this. And so that's some of the absurdity that we're seeing. And so the thing is, this is the universe that I live in, is where we see these results. Now, for the majority of people, the IRS rules by fear and intimidation. That means you can get away with doing the wrong thing a lot. And a lot of people do, and they're like, yep, got away with it. But that also means that you could do something maybe not even wrong.
Yeah.
Maybe you didn't do anything wrong. And man, you get the full heat of the IRS. And unfortunately, too many people don't look at the IRS as the mortal threat that they are. The IRS looks at you as a target. Remember that. I don't care how nice you are. I don't care how nice you are to your kids, how much people love you. The IRS doesn't. The IRS wants your stuff, and you are a target, and you are a statistic just for them to throw into some press release to impress Congress with. That's all you are. They're not your buddies. They're not your pals. Pals don't do that to each other. Pals don't go into each other's affairs to say, hey, how much money you make? Okay, here's a bill. See you later. Have fun with it. Sure. That's not at all. Remember that. They are not your friends. And if you believe the IRS is your friends, ask the people at the IRS who work there. Ask how much they think the IRS is their friend. And you'll find some responses where it is a very hard place to work at. And the people at the IRS don't like it very much either. And as the IRS has more and more responsibilities that are impossible. Imagine it's like, what if there's a gray area where we're running like, okay, this way or that way. Well, look, we're attorneys with, vast resources. Well, what about that poor IRS employee who's got a 4-year degree, had maybe 4 weeks of training, and is now looking at this to say, how do I not completely embarrass myself in this big issue that I don't even understand? That's what they're under. And they're like, oh my God, I'm going to get smoked and I'm going to be humiliated. My supervisor's going to be, because I can't understand what these are. And these attorneys are attacking me. Yeah. So you think about that. So remember that the IRS is just, I can't emphasize that enough. The IRS is not your friend. It is never going to be.
It's amazing. I think the citizens of the United States, or American tax persons, I guess we should say, they're in a very unique disadvantage, I would say, if it comes to any international ambitions. Because a little bit what I take away from this is it's good to go and be wild a little bit during your college years, but if you want to start a business, the IRS probably wants you to do it back home. Otherwise there will be many hoops to jump through. But this has been really interesting, Anthony. Thank you for entertaining my hypotheticals.
Absolutely.
And, some of which are not hypotheticals, some of which I lived through myself. But I think I'm also a good example of the fact that, yes, it's more information to take in than any one human being could accommodate. But it is manageable if you have the willpower, and if you're kind of self-righteous enough to step forward and own these situations for what they are. Or just hear this video before you go on your little European adventure and do it right from the beginning.
Right, yeah.
That's the preferred way.
And Ryan, I just want to close with this, and as one of the big here is one of the issues that we run into, and it's a big issue. When you live overseas, you might be in a country where the exchange rate really can stink when you're trying to buy things in the U.S., and that includes when you're trying to get real tax help, because the chances are the best people might be based in the U.S. So the problem you have is you might be paying 4 times what you'd have to for that help. And international tax prep is already a little bit more expensive than traditional. So essentially, it's very easy to be priced out of the compliance, and it's a huge issue. It's the number one complaint of our clients, the cost. Hey, Anthony, I love you to death. Yeah, and we don't like it that much. So the big thing of what I was working on for 2019 is lowering our costs. I don't have it up yet, but it is going to be going. If you go to IRSMedic.com, we will be lowering our prices, and I think our prices will be the best in the industry. It's going to be pretty exciting for 2020 as we unleash this. We're going to be bringing it out, but we think we can beat everybody's prices and do something no one else is doing, giving automatic audit protection, because with the overseas returns, you have all these little penalties. And so I would just want people, as you get closer to tax deadline, if you're overseas, remember your deadline is going to be June 15th this year, around June 15th. If it's on a weekend, it'll be on that Monday. So keep in mind as we go through these, because I get it. You want to live overseas and you're having fun and you want to be in compliance, but there's only so much money out there. So stay tuned, and we will be able to, I think, beat anybody out there and deliver you something much better.
That's very exciting.
Yeah, I think so. Yeah, it's going to be really, really cool. So it's coming along. We're getting close. And yeah, again, that's why you haven't seen as many YouTube videos as I hope to, Ryan, as I've been really focusing on this. Clients complaining about those fees really will motivate you. So with that, we're going to be doing this again, Ryan, right? We have another one coming up.
We should do this every week.
I think we should do this every week. It's a lot of fun. So I think people should subscribe so they could stay tuned. And also, if they could find you on YouTube, as you are absolutely my most famous YouTube host.
Well, thank you very much. Yeah, so, next week we should talk about some other topics: marrying a U.S. citizen, constructive ownership.
That goes hand in hand. Yeah,
there's a lot of interesting stuff, and I think we could wrap it up there.
All right, sounds great.
All right, thanks, Anthony.
Thanks, Ryan.
See you later. Bye-bye.